I'm Charlotte McLeod with the Investing News Network, and here today with me is Adam Rozencwajg, Managing Partner at Goehring Rozencwajg. Thank you so much for joining me online today once again. Great to see you.
Nice to see you as well. Thanks for having me back.
Yeah, really excited to have you here because you've helped us understand a couple of different markets in the past. And today we have you back to talk about what's going on in oil and gas. There's so much going on right now. And I want to start with, what's going on in current events right now. So Russia and Ukraine, starting with the very basics. We've seen countries enact sanctions there. And I wondered if we could just go over what we've seen in terms of the sanctions so far. Who's doing that right now?
Sure thing. So obviously, Russia is a very large oil and gas producer, exports oil and natural gas as well, gas via pipeline to big parts of Europe, as well as some pipelines into China and LNG. And then on the oil side of things, exporter via pipes and ships as well. The recent invasion of the Ukraine by Russia has prompted several countries, notably Canada, was the first to enact sanctions against Russian crude oil. Europe, is not taking the steps of curtailing their gas imports from Russia, mainly because they have nowhere else to get that natural gas from. But we are starting to see a trend now that's propagating through the world of more and more sanctions on Russian oil, and to some extent, given how fungible global crude oil is, that it those volumes will be effectively bid by other buyers, notably China, probably at big discounts to what global prices would be in order to help incentivize and pull that crude. So that oil will likely get out into the world market and into China, displacing imported volumes from other places. But we're certainly beginning to see, the beginnings of sanction activities against Russian oil and gas.
Yeah, this is exactly kind of where I wanted to go with that. So we are going to have the countries that have put sanctions in place, they're going to need to be sourcing supply from elsewhere. So where are we seeing them turn to? And then on the flip side of that, we have Russia, which will have supply that needs to go somewhere else. So maybe we can talk a little bit more about what you see happening there.
Sure. And one thing I would like to bring up, and kind of sidestepping the question maybe a little bit, going into this recent conflict in the Ukraine, global oil markets were extremely, extremely tight. Inventories were declining, which means that on a day-to-day basis, demand was running ahead of supply. Supply was growing in the US, but that was from a bit of a strange phenomenon that we like to call duct liquidation, which is to say that wells that had been drilled but never completed in 2020 and 2021 were now being all brought online all at once. So sort of this one-time rush. But otherwise, around the world, supply had been relatively muted. Demand was very, very strong, and inventories were extremely low. So we had a very, very tight oil market. And the reason I bring that up is, current events are developing hour by hour, and today is the 15th of March, and we see oil here is off $6, down below 100 again, on hopes that maybe there's developments taking place. But what I would point out is that the current crisis in the Ukraine is not the cause of high energy prices today. It's the catalyst that really forced prices up a lot higher. But we were very, very tight beforehand, and we're going to be very, very tight here after hopefully some of these situations resolve themselves. Now, having said that, the immediate implications is obviously a big disruption in the global flow of oil, and that's going to take a little bit of time to sort out. No one really knows exactly how that's going to work itself out, but I think the most likely scenario would be to have Russian crude most likely flowing into China, which would displace imports of that China has from the Middle East. That Middle Eastern crude would then, be allowed to go to Europe and the United States that was importing the Russian crude that would now be displaced. So there's going to be some, movement around and some jostling and what have you. But eventually, I think the majority of that oil should probably be able to be, placed somewhere.
Right. And let's talk a little bit more about what's could be happening long term, because as you mentioned, before this was even happening, we had a tight market. And I imagine that moving forward, this will continue. And I also would think that, okay, if the conflict stopped, these sanctions were put in place because of this war that's going on. If it ends, I don't think the sanctions would end right away. So, what can we say right now at this point about the long term effects we may see?
Oh, look, I don't think anybody knows, and I think if anyone is giving you an answer, they're making it up. But what I would say is, to the extent that the recent events leads to more capital spending in the oil and gas business, that'll help supply, and to the extent it doesn't, that'll hurt supply or continue to keep supply relatively muted. Demand is very, very strong around the world, so I think that's one thing that's surprised people, and I don't see this recent events taking place in the Ukraine really impacting that. So the way I think about it is whether or not the current events and the current climate is one that will pull capital into the oil and gas business, because that is ultimately why supply has been so weak for the past 2 or 3, 4 years now. Had developed the shales in the United States in the 2010 to 2020 period. But we started to see the best areas of those shales begin to get depleted in 2019. So we don't have that huge source of growth that we had in the past. That made up 90% of all non-OPEC oil supply growth over the last 10 years. So you cannot overstate how important that was. And that's not really there anymore in the same way to be able to grow anyway. So until you can attract capital back into the space, I don't think you really solved the problem. And I don't think that we're not seeing that happening yet. And I think it's going to take some time. And then it's going to take time to mobilize rigs and things of that nature. On the worst case scenario, if you shut Russia off for an extended period of time from Western capital and Western oil field services, that should have eventually an impact on the actual quality of their oil fields, and that actually would have a very bullish tightening effect on global oil markets, right? If they can't get access, if they're completely shut off from the global financial system and in a state of economic collapse, which is, you could imagine sustained sanctions leading to that, it would be very difficult for the Russian oil service industry to be able to properly maintain and take care of those fields. But that's a ways down the road, and I don't think that's necessarily a high likelihood event. We just don't know.
Yeah, it's very uncertain right now. And sorry for throwing all these questions at you that we can't really give a definite answer on. I wonder if we can look a little bit more closely at the companies because, along with the country sanctions, we are seeing oil and gas companies that want to leave Russia right now. And I know from some of your writing that you weren't feeling very optimistic about supply from these companies moving forward. So, implications for oil and gas companies right now, broadly, what is that looking like?
Well, listen, I think it's next to impossible for a Western oil and gas company to operate in Russia right now. The big question will be for some of the Russian listed oil and gas names, whether or not they can recover, depending on how things go from here, which is anyone's guess. But I think you're definitely seeing Western companies move away. You had seen that already, frankly, over the last number of years. BPT&K was a disaster of a joint venture that ended very badly for BP and saw them sort of abandoning their assets and leaving the country under the threat of violence for some of their executives, if you believe some of the stories. So it hasn't been a very hospitable place, and it certainly isn't now. Oil and gas companies in the United States, on the other hand, were in extremely good shape going into this crisis. They had repaired their balance sheets dramatically from the COVID period. They were returning capital to shareholders, which was leading to even tighter, more bullish conditions for crude oil in general. But you have very high quality companies that at current strip prices trade for well above a 20% free cash flow yield. So I think that's really kind of the sweet spot for investors looking to get exposure to oil prices.
Yeah, and of course that is the question for investors right now is, you have this situation that's quite volatile and uncertain. So how do you turn that to your advantage potentially? Is there anything more you could say about that angle?
Well, we had quite a bit of our investment strategy in oil-related securities before the recent outbreak and hostilities in the Ukraine, and we maintain those positions today. I think for people that look to investors that want to add exposure or put on exposure to oil companies. There's high quality companies in the US. There's very cheap high quality companies in Canada as well. And I'll sort of leave the stock picking to them in some cases. But people can go and it's not difficult to find out what our holdings are. That we publish them on our fund website, and so you can go take a look at that if you would like. The other thing that I would point out from a timing perspective is that if were hostilities to de-escalate, which I sincerely hope obviously happens, I imagine that all these names will sell off, quite dramatically. And to me, that would be a wonderful buying opportunity for someone who doesn't have exposure yet to this space, because as I said before, the supply story it was not tied to the Ukraine and Russia, and so when you remove this catalyst and this impact, you still have a very bullish story. And I think made even more so now by the fact that investors and maybe policymakers even realize that they can't take for granted the oil supply base as much as they have in the past several years. That this idea of being able to really antagonize oil companies and have institutional investors not maintain any exposure to oil investments whatsoever and still expect there to be a good, proper functioning security of supply oil market when the time comes is not realistic. So I think the psychology, that might be the lingering effect of this crisis, at least to the Western investor. But if anything were to de-escalate and the oil names were to sell off, I would use that as a buying opportunity wherever possible.
Yeah, and it's interesting you talk about that because definitely I think oil and gas has faced some pressure from, the ESG narrative that's really gaining steam over the last years and years. So do you see people maybe after this is over or as we're going through this kind of realizing, yeah, we really do need oil and gas still?
I hope so. I mean, I don't know. People always ask me. We try to lay out for our partners and our clients the realities and the problems of wind and solar and lithium-ion powered electric vehicles. And when we started doing that, people said, "Well, it's kind of interesting," and other people said, "I'm not so sure." Then, as time went on, we said we should expect to see this, this, and this, including grid instability, including rising power, and so we've seen all those things happen. And now we're saying, well, it's going to lead to a massive security of supply issue, and it's going to lead to just a shortage of energy, broadly speaking. So what makes people realize that? I don't know. It seems as though for your Canadian and American listeners, it's probably not readily obvious, but there's a full-blown energy crisis through most of Europe and through Asia now. And in India last week, I think we hit the all-time high for LNG, liquefied natural gas, which was $100 an MCF for a single trade, and that works out to be $600 per barrel oil. So, we bottomed, natural gas prices bottomed at $1.85 last year, and now they hit 600. So, if that's not an energy crisis, I don't know what is. Now that 600 isn't going to be sustained, but nevertheless, we're in a full-blown energy crisis. What does it take to get people to wake up to that? Anyone's guess. I don't know, but I think that they're beginning to now.
Yeah, I would agree. And maybe it is a little bit more muted over here in Canada and the US, but I think we're getting there. I wondered if you could talk a little bit more about prices and what we might expect to see from oil and gas in 2022, keeping in mind that there is such uncertainty in the market
Sure, sure.
continuing.
And just absolutely. And one more thing that I'll just say about ESG and wind and solar and stuff like that. We can invest in anything that we want. So it's not that we don't like wind and solar because we're wedded to oil and gas. We can invest in anything, including copper in order to power windmills and stuff like that. The problem is that the energy efficiency of windmills is very, very poor compared to oil and gas. Now, the problem with oil and gas is that it emits carbon. So that's sort of the framework in which you're operating. But the extremely poor energy economics of wind and solar make them unsuitable for widespread power generation. And this is not like an academic exercise. What you're seeing in Germany, when the data is released later this year, I think we'll see that Europe in general, and Germany in particular, probably burned more coal last year than they've ever burned before. Their CO2 output as a result will probably be extremely high. And in Germany now, they've resorted to burning wood for heat and for power. I mean, you can't make this stuff up. It's 2022 and Germany's burning wood. So this is not just sort of some abstract concept. We're seeing it happen right now. And what people don't fully realize is that the reason wind and solar have fallen in price over the last year is mainly because oil and gas has fallen, and the biggest input cost to renewable energy is just energy, to build these massive Eiffel Tower sized windmills and things of that nature. So what's going to happen when the price of energy, broadly speaking, starts to increase? Most people, believe it or not, most people think that that's going to be good for wind and solar because it's going to make them more cost competitive. Nothing could be further from the truth. It's going to raise their costs, and we're seeing that happen already. So look, we're in an energy shortage. We haven't invested in this industry for 10 years. We had abundant, cheap oil and natural gas because of the shales a decade ago. We took that advantage and we squandered it to a certain extent, or to a large extent, and now it's really coming home to roost. So where could oil prices go? We used to think that that $120 was quite sustainable, given the fact that you spent so little money, and until you get that money back to work again in the energy space, you're not going to fix the problem. Could it spike to 200? I mean, I think it certainly could. Inventories are so low right now. Production's having a tough time growing, and demand is really strong.
Okay, and these are really interesting things that you're bringing up. I think people don't realize it. It's very sobering. What does the energy mix look like to you down the road? How are we going to bring in all these elements and hopefully balance them out into something that works if we look, say a decade into the future?
Well, I do think that whenever we look at the energy mix, and you have to be difficult, or you have to be cautious when you do that, because just because it's rational, makes sense, doesn't mean it's going to happen. However, what I like to look for is I like to look for things that have very good, what we call energy economics, also known as energy return on energy invested, or energetics. It's kind of a vague concept, but it means how much energy does it take to generate your power that you want. And there's some things that it takes more energy, and some things that it takes less energy. You could imagine, chopping down trees, growing trees over decades, and then chopping them down and hauling the wood and burning it is different than, drilling a very productive oil well and getting crude to come up. And so you can try to compare the different technologies. And to us, that is really the most important criteria. I personally also think that carbon emissions are an important criteria as well. I think that our society's willingness to tolerate huge amounts of CO2 emissions has gone down a lot. And so anything that would fit the bill would probably have elements of both really good energy economics and fairly low carbon emissions. And to me, the two things that really jump out are natural gas, and then most importantly, nuclear power. Nuclear power has off the chart energy economics, and it emits no CO2. So perhaps if there's one thing that can come from all this, maybe it's a realization that nuclear should be a bigger part of our future. And we're starting to see that already. So now Europe, just before this whole Ukrainian issue, definitely got buried in the headlines, probably rightfully so, but they just announced what they call their taxonomy, which is an official listing of what's green and what's not green. And nuclear made the cut, as did natural gas. And so now, you have India, China, Europe, and Canada. Everyone has embraced nuclear power. It's only the Americans that haven't, despite having created the technology in the first place. But I think that'll change too. So I do think we're sort of on the verge of a new period of whatever people are calling a nuclear renaissance, but a new period of the pendulum swinging back in favor of nuclear power, which would be wonderful. It would solve all of our
Yeah.
problems.
I mean, nuclear renaissance does have a great ring to it as well. So we'll see if we get there. As we're finishing up a little bit here, I wondered if there's anything else you would want to share with the audience on oil and gas. I know we focused a lot on what's going on currently, but there's a lot obviously going on beyond that. And I wondered if there's anything that you would highlight.
Yeah, sure. I think that the two biggest misconceptions that have been present in the oil and gas industry over the last several years have been the following. The first has been on the demand side. It was only a year ago that energy pundits and analysts said 2019 was likely the peak, all-time peak in global oil demand. The idea being that electric vehicles would just displace more and more and more. Instead, 2022 is going to blow 2019 out of the water. So it's like, I don't know how you could get something so wrong so fast. It was like 12 months after making that call that you made a new high, and demand's going to continue to grow. It's going to continue to grow for a whole variety of reasons. We're not all that enthusiastic about electric vehicles because they require so much energy to build. That's the main reason why. But even if you take the fairly bold assumptions that some people are talking about as far as EV rollouts, it's not going to make a dent in oil demand here going forward for a number of years left to go. Demand has just surprised to the upside almost every year for the last 20 years, and people still can't really bake it into their numbers. So demand is really strong. That's going to continue. And supply has been really dramatic change because for the last 10 years, as I mentioned before, the shales in the United States brought on nearly all, if not basically all, of non-OPEC plus oil production over the last decade. It was as important a new field development as the Middle East was in the 50s and 60s. This is unbelievably important. It happened very, very quickly. It was dramatic. It took oil prices down 90% peak to trough, but it's not an infinite resource. And it actually turns out that we have likely developed the majority of the best acres. And so if you look at the three major shale basins in the US, two out of the three have never been able to grow again after COVID. And the Permian is the only one that's showing any growth. And we think that growth is about to stall here as well. So I think it's a very poorly understood market. Everyone just, has left it for dead. It used to average as high as 30% of the S&P at its peak. It got to as low as 1.8% of the S&P. Today, it's like at 4. So it's still incredibly low, incredibly cheap. No one has any interest. No one's buying the shares, and they're yielding 20%.
Okay, that sounds like a good note to wrap it up on. So thank you so much for being here to go over what's going on in the sector. It was really helpful.
Thank you.
Great. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Adam Rosenzweig of Goehring and Rozencwajg.